Now let us look at the morning star pattern. This is a daily time frame chart of copper. So we are looking at a commodity chart. So this is how a morning star looks like. It is not an ideal morning star. It's a variation of a morning star, and I will explain to you why. So there are always two versions of a pattern. One is ideal and one is variation. The closer you are to ideal, the higher is the probability of a reversal. Before we get into that, let's try to understand the conditions for a morning star. So, a morning star, as the name sounds, it's a bullish reversal pattern. So, after this pattern, the price is either likely to go up or flat. That's the correct meaning of a reversal. After this pattern, the probability that the price will go down is very low. So that's reversal pattern. Okay. The first condition is, since it is a bullish reversal pattern, the first condition is it must come after a downtrend. The second condition is the first candle of the three candle pattern should be a tall red real body. Now there is no specific definition of tall. You just have to look at the chart and see on a relative basis whether the candle is very short or whether it is tall. So the second condition is the first candle of the morning star should be a tall red real body. The second candle is the third condition. The second candle should be a small real body that gaps away from the prior first real body. So the real body of these two candles should not touch. The shadows can overlap, that is okay, but the real bodies should not touch. Now in this case they are touching each other, that's why I call it a variation, not an ideal version. Ideally this candle will gap away from the prior real body, so there won't be any window. The shadows will overlap, but there won't be any window. That's the ideal version. Condition number 4, the third candle should be a green candle. It should again not touch the second candle, the real body. Plus the closing of the third candle should be above the midpoint of the first candle real body. Okay, so in this case it is clearly above the midpoint of the first candle real body. Not only that, it is above the open as well as high of the first candle, right, of the morning star. So it's even more powerful than a ideal version. Again, that is another reason why I call it a variation. Normally the candle should close above the midpoint of the first candle real body and below the high of the first candle real body. That's how a normal ideal morning star takes place. If you look at these three candles, it is similar to a morning star. Again, it's a variation because it's touching the two candle real bodies and the closing is just near this midpoint. Ideally it should have been slightly higher, then it would have been qualified as a morning star, then ideal version of a morning star, provided this real body was not touching the two real bodies. And as you can see, the price went up from here since it's a bullish reversal pattern. So those were the conditions, and by the way, the low of the morning star becomes a very powerful support area. So the entire pattern becomes support. The low of the pattern becomes support. So this would be a risky trade because it is not confirming some prior support area. But imagine if it was confirming some prior support area, you would enter here. That would be your entry point. That would be your stop loss. And this would be your first target. And this would be your second target, right? So you are getting nice 2 to 1 reward to risk ratio if you target this, and nice 3 to 1 reward to risk ratio if you target this, right? That's the power of a morning star. As you can see, both of these targets were achieved. It took some time because the price consolidated here, but nonetheless the targets were achieved and the price never came to the stop loss. So that's the power of a morning star. It's a very powerful bullish reversal pattern. Go to this link. I have a training program where I teach the morning star in detail.